Thank you for the opportunity to present our proposal. We'd like to go over the current conditions, most likely buyer, factors affecting price and time, specific property issues, and ultimately our recommendation. Now, the current listing is at $11.8 million, approximately $260 a square foot, and has reportedly been for sale since February of 2026. There is also a separate listing for lease that has been on there since June of 2025. This exposure is important because buyers can see that the present price has already been tested as per LoopNet and other lease listing history. Supporting the valuation, the Hialeah estimated industrial price is approximately $230 a square foot, with the median at $236 and the average at $239. Now, a reasonable owner-user premium for palmetto exposure, freestanding configuration, fenced yard, heavy power, and showroom supports approximately $245 to $250 a square foot, 11.2 or 11.35 million. Now, the broad 28 property comparable group averaged $259 a square foot, but that group averaged 1981 construction, 24-foot clear heights, and over 14 loading docks as an average. The subject was built in '67, has less than 20-foot clear, and has less than half of the average of the number of docks. Therefore, the broad average cannot be applied without a substantial downward adjustment. The expected time to sale at the recommended price of $11.25 million launch price, a serious buyer activity and initial LOIs would take place between 60 to 120 days. Negotiation and signed contracts with 3 to 6 months, due diligence, appraisal, and financing another 60 to 90 days, and ultimately a closing within 6 to 9 months of the true relaunch. Now, we've attached the Miami Industrial Capital Markets report to all of this, so you can see that the approximate time is 6.3 months to sale, with a 50% probability of selling in 4.7 months and an 80% probability of selling in 9 months. Now, because the property has already accumulated substantial exposure, the marketing must look like a genuine relaunch. Corrected information, new positioning, a defined pricing reset, full due diligence materials, and concentrated outreach to qualified owner users. Now, if ownership decides to maintain the price at 11.8, I would budget an additional 9 to 15 months with a meaningful risk of no sale. If speed becomes the principal goal, an asking price around $10.95 million should reduce the expected closing to approximately 4 to 6 months. The most likely buyer to pay the highest price is a regional owner user, particularly in light manufacturing, stone, cabinetry, furniture, lighting, building, possibly food related, someone with a showroom warehouse company needing Palmetto Expressway visibility, or someone wanting quick access to North Dade and South Broward. Now, an owner user can value the building based on operational usefulness and the replacement cost instead of relying entirely on investment yield, whereas a private investor is a secondary buyer. An investor would discount for vacancy, lease-up time, tenant improvements, commissions, capital expenditures, and the declining rent growth, whereas an institutional buyer is less likely to pay even for the building based on the lower clear height and the smaller size and the older loading configuration. Factors that are affecting the pricing and the time. Principal factors are the negative absorption within Hialeah. Hialeah recorded 280,000 square feet of negative absorption. That means that more tenants were giving up their space than they occupied. And the rising vacancy in Hialeah is up to 5.4, up almost 1% from last year, and it's expected to reach 6.3%. The county, on that note, they absorbed approximately 1.2 million square feet while they delivered 4 million square feet, and they still have another 3 million that are under construction to be delivered. All of that being said, vacancy increased from 6.5 to 7.4, and it's expected to go up to 7.6, so we can't see more vacancy. Slower rent growth. Hialeah rent growth is now under 1%, and it's expected to go to 0.6% compared to the 5-year historical of 8.6%. Financing pressure is the last one. As of August 21st, we know that the prime rate was 6.75 and the 10-year treasury was 4.74. This is increasing debt service costs for buyers. And the sale to asking discount we have seen across the board is 9.3% below the asking price. Now, if you apply that to existing 11.8 million right now, that points to an approximate sale of 10.7. Property-specific issues that we'd like to address during the remarketing or the relaunching is the inconsistent property information that's out there across the board regarding clear heights, dot counts, parking, lot area, sprinkler. Make sure that all of that is cleared up. The functional obsolescence of less than 20 clear height is not something that we can really change, nor can we change the number of truck wells. We can just address it up front, make sure that everybody is aware. There will be inspections for HVAC, the roof, and the building systems. Buyers will definitely examine the roof life, air conditioning, and all of those systems. And lastly, the appraisal at $284 to $332 for comparable sales involving newer buildings. Obviously, the appraisers are not going to take those appraisals without doing some sort of significant adjustment, downward adjustments for your building. Our recommendation, based on the current Hialeah industrial fundamentals, adjusted comparable sales, property's unique owner-user attributes, we recommend a market launch at 11.25. We anticipate an executable sale between 10.6 and 11 million, with completion in approximately 6 to 9 months. Our strategy will target operating companies that can place the greatest value on the building's heavy power, freestanding configuration, showroom component, fenced yard, and Palmetto Expressway exposure, while eliminating due diligence certainty up front that can reduce the price or delay the closing. I hope this is useful. All these reports are attached.